Welcome to the Apartments 101 Masterclass. In this training, you're going to learn how to purchase your first or possibly your next apartment building in the next 180 days so you can accelerate your path to financial freedom. And before we get started, let me ask you a question. Have you read this book, Rich Dad, Poor Dad? Because most people who read this book think that the best way to invest in real estate is buying single family rentals or flipping houses. And that's certainly what I did, and maybe you did as well. You're thinking about doing it. But with flipping houses, it's actually a lot of work. And if you stop buying and fixing houses, you stop making money. And that's not passive income. And what about rentals, right? The problem with rentals is that if you do the math, you'd have to own 10, 20, or even 50 houses to earning a meaningful income. It's not really scalable. And this was my biggest frustration and challenge when I first started investing in real estate is scale. How do I scale this thing? I flipped 36 houses in 3 years, but how could I scale that? How could I scale my rentals? And maybe you share the same frustration about real estate as well, which is maybe why you're watching this. And we're going to talk about in this training to show you the right way to scale your portfolio by purchasing your first apartment building and doing so literally in the next 6 months so you can become financial free in the next 1 to 2 years. Now, I know this is a big promise, but we've done it for hundreds of people from all walks of life since we started doing this in 2014. And so I know that what I'm going to share with you today is going to work for you as well. So here's what we're going to cover here in this training. We're going to talk about the 3 reasons why multifamily is the ultimate wealth builder. I would argue the only one, better than any other real estate strategy or business opportunity that you've tried or are looking to do. But we're also going to talk about the 2 things that are probably going to be holding you back, the 2 myths of apartment building investing. And then we're going to talk about the 4 pillars of dealmaker success. They're really the how behind doing your first deal, the 4 things to pay attention to because you can't just take your single family house tactics into multifamily. And then we're going to talk about how to do bigger deals faster by leveraging what we call the 3 freedom accelerators, the 3 hacks that you can follow to actually do your first deal in the next 6 months. Now, a quick professional disclaimer before we get into too many of the details. And because the lawyers are making me do this. But if you're going to buy or invest in real estate, there's going to be risk. Now, if you don't buy real estate, there's also risk, obviously, but I don't know your personal situation, so I can't give you personalized advice. So what I'm going to share with you today, you should consider for education purposes only. If we haven't met before, my name is Michael Blank, and I'm the host of the business podcast, Financial Freedom with Real Estate Investing, also the author of the book by the same name, even made it to cover the same thing, easy to find on Amazon, over 1,600 reviews, and through our investment company, Nighthawk Equity, my partners and I own $300 million in real estate. Now, you might be wondering at this point, Michael, this is great, but if you're such a great investor, why are you teaching people? It's true that it's easier and more profitable to buy a $20 million building than teaching others how to do it. And I have been criticized, frankly, for not focusing exclusively on the investment side of the business. But for me, it's not nearly as fulfilling as helping others do something they didn't think could be done, doing their first deal and then quitting their job. I love that. That's also why I wear the shirt. Financial freedom is our message. And so since 2014, I've made it my mission to help people become financially free with real estate. And since then, my team and I helped students purchase more than 15,000 apartment units worth over $1.6 billion. And as a result, we've helped hundreds of people achieve financial freedom with real estate. I'm going to share with you how that's possible. Now, since becoming a full-time entrepreneur in 2005, gosh, I tried so many things in pursuit of financial freedom. I traded stocks and options, got into a restaurant franchise, had some rentals, and did a bunch of flips. But none of these created the kind of financial freedom that I was looking for. In 2011, I started investing in apartment buildings, and it changed everything. I finally found the one real estate strategy that actually works, and quickly, not in 5 to 10 years, but in 1 to 2 years. And then we've now taught hundreds of people how to do the same thing. And this is why I'm excited to share with you this strategy with you today, because multifamily is, in fact, the ultimate wealth builder. Better than any single family strategy like flipping or long-term rentals, short-term rentals, the BRRRR method, better than any franchise or other business opportunity you might be considering as well. And there's really 3 reasons for that. I want to talk to you about why multifamily is the ultimate wealth builder, better than any other strategy you may have tried or might consider. And there's 3 criteria to run your filter through anything you're going to do in the investing world. The first one is scalability. Multifamily is more scalable. So here's what I mean. In 2006, I had flipped a couple houses. And in 2009, though, remembering the good experience I had flipping those 2 houses, I decided to scale that. So I was borrowing money from hard money lenders at first. then borrowing money from private individuals. And over the next several years, I flipped about 36 houses, which is super cool. The problem is it's hard to scale a flipping business, right? Most people are lucky if they can handle, one flip at a time. 6 months per flip, you're flipping 2 houses per year, $100,000 per year, pretty cool. But how do you 10x that if you really want to scale that? It's very difficult. And you can only scale this by working harder, which is what I did. I thought to myself, well, let's work a little less hard, and why don't I just build a rental portfolio? And I did some simple math, and if I wanted $10,000 in passive income, and if I get each rental to cash flow, let's say $200 a month, I need 50 rentals. That's 50 houses. I just spent 3 years flipping 36 houses. It would take me 5 years to buy and hold houses, and I've somehow figured out how to finance it and how to manage the whole thing. And so scaling a rental portfolio didn't seem very practical either. Now, let's talk about multifamily. How is it different? And how is it really the only real estate strategy that you can actually scale, and this is important, without having to work more? And it's this, in order to understand this, you have to understand the economics of investing in apartments. So let's look at the different profit centers of an average $4 million deal, okay? So the first thing that's unique about this, and you maybe you've never heard this before, is this thing called an acquisition fee. Okay, so when you buy an apartment building, you raise money for it, you can pay yourself 3% of the purchase price. Okay, so this fee comes out of the deal itself. It'll be an expense on the HUD one, and it comes out of the deal itself what investors put up. And for a $4 million deal, you, and if you have a partner, get paid $120,000 in acquisition fees. That's a lot, right? And so let's say, gosh, your living expenses are $10,000 per month, and you got maybe another $60,000 in savings or so. Now you have a 12-month runway. And that's why many new investors can quit their job and focus on this business full time when they do their first deal because of the acquisition fee. All right. Now, in addition to the acquisition fee, the $120,000 at closing, that same $4 million deal generates an average of $100,000 per year over the next 5 years. Typically, when you hold this deals over about 5-year period. Now, let's go through each of these. Now, before I say anything, these numbers are not guarantees in any way. However, I can tell you that the results that I'm about to share with you are not unusual for those people who follow our system, do the work, and stick with it. And in fact, that's where we got these numbers from, is from dozens and dozens of case studies. So understanding the economics and the profit centers, as you put these deals together, you can pay yourself not only the acquisition fee, but also asset management fees, or about $12,000 per year for a deal this size. Now, as I'll talk about later, when I talk about the structure of how this is put together, you also get equity in the deal. And so you get about $200,000 of cash flow for you and your partner, or about over 5 years, about $40,000 per year in cash flow. And then you get about a total of $200,000 in profit. When you sell in 5 years for you and your partner, it's another about $42,000 per year on average. So you add all that stuff together, and this deal generates an average of $100,000 per year for you and your partner. And you add the $120,000 to that acquisition fee, and this one deal can generate $620,000 over 5 years. Wild, right? And this is why multifamily is, in fact, the ultimate wealth builder, because not only can one $4 million deal pay you $120,000 closing, which would accelerate you becoming full-time and quitting whatever you're doing, but it also generates wealth after that, a total of $620,000 over about 5 years. But let me ask you a question, right? Theoretically, if you can do a $4 million deal, now you might not be convinced you can do that at the moment, but let's say you can. If you can, could you do it again, right? Well, the answer is probably yes. If I can do it one time, I can probably do it again. What if you could do it one $4 million deal per year for 5 years, right? So this one mechanism, this wealth building vehicle, could generate $3.1 million over 5 years. That's amazing. And if you divide it by the number of months in 5 years, it's $50,000 per month. So investing in this business could literally generate $50,000 per month for you, your partner, and your family. And it's very unique also because unlike any other real estate strategy, you get paid upfront, during, and after. And that makes this a very, very powerful vehicle. And I don't know any other business opportunity or real estate strategy that can generate that much wealth in as little time. Let's talk about the second criteria, though, the second reason why I believe multifamily is the ultimate wealth builder, and it talks about being more passive. I don't want to scale something and work harder and harder to do it. And this is why, to me, if I'm building a business and I want to scale something, I don't want to have to work harder. I want to work smarter. And so let's take a look at these other strategies that are not nearly as passive. We already talked about flips and rentals. Okay, let's talk about franchises and buying businesses because, gosh, I've done both, right? I've gotten into to the restaurant franchise. I had 8 restaurants at one point, and it was set up as a passive investment. I hired a guy to run all the restaurants. Everything was pretty cool. But then what if the guy left? Or what if the guy wasn't performing? Right now, who's running this business, these franchises that you own? Right? Well, it's going to be you. Also, if you look at these franchises, a lot of these franchises, they're really meant to run for an owner-operator, not for some passive investor. Unless, again, you build a lot of scale, right? You get into 10-plus franchises, now it becomes more interesting. But if you get into one franchise, guess what? The financials probably are not going to work with you being a passive investor and you hiring a general manager. So take a close look at that. Also, when you're buying a business, same thing. What if you don't have a CEO, right? It's going to be you running the business. Or what if you have a CEO and they quit or have to be fired? Now you're running that business. So I don't love that as much. I also traded options for about 18 months. We traded iron condors. Super exciting, okay? But if you're not watching the markets constantly, well, you're going to lose more money than you might otherwise. Plus, it's also pretty risky. And none of these really are as passive as multifamily. What makes multifamily more passive? Well, with multifamily, you have more units, which equals higher revenue, and that makes it easier to afford a high-quality professional property manager. Right now, with rentals, you typically get a part-time real estate agent to manage your rentals. You get very mixed results, and they take 10% or more of the income. And that's why so many landlords manage their own properties, which makes it more work. But with multifamily, because of the economics, you normally hire a professional property manager. In fact, it's built into the business model. It's unusual for an owner of an apartment building to self-manage it because of this very fact. And because of the fact that you can leverage professional managers, which you don't get in any other business. Because this thing exists, you can manage very large portfolios with just a partner and a few virtual assistants. Right? So, and the point of this is that you can scale faster with less work. And this is very important to me as I'm trying to build a business. And so you can buy one building, put a professional property manager in place, and then do it again and again and again every time you're delegating to a professional management team so you don't have more and more stuff to do. And that's how you can build a real estate empire without working more. Now, there's a third component, anything that you might think about doing to scale, and that is, what about the risk component? Let's talk about risk here for a second. Everything has risk, but there's some have more risk and some have less risk. Let's talk about single family in general and rentals, for example. I think they're riskier for 2 reasons. One, they only have one tenant. You have a house, that tenant stops paying or moves out. You now have to pay the mortgage and all the expenses out of your own pocket until you can get that new tenant. And then irritatingly, you have to actually put money and repairs in to get that tenant back in. Also, I did not like the way that single family houses behaved in 2008. I know people, maybe know people who not only lost a rental property, but entire portfolios. Okay, and they may have spent 5 years building up a multi-million-dollar portfolio and they lost it all because of the recession. I don't like that. I don't want to spend 5 years of my life building something and then losing it because of something I can't control. Now, with multifamily during that same time, where 4% of the houses were lost to foreclosure, only 0.4 were in default in that same time period. And it's because the break-even point is lower. You have multiple tenants, right? So for multifamily to start losing money, you'd have to be, 65% occupied, which is, it's possible, it's just not very likely, right? Typically what happened during this time is cash flow and rents were about, they stopped growing, maybe vacancies increased a little bit, but the properties were still cash flowing. So the owners during that time simply just rode out the short-term downturn. That's exactly what happened. Let's talk about short-term rentals, right? A lot of people got into STRs over the past years, and I really used to like STRs a lot. I have a good friend of mine who built up a significant STR portfolio, got in a long time ago, 7 years ago, literally crushing it. I mean, you can make like $1,000 a month for a single STR, which was really, really significant. But then about 3 years ago, he noticed a decline in income, and he attributed to the increased competition in a lot of the areas he was in because, my gosh, if it's so profitable, everybody's getting into it. Forget about the long-term rental stuff. Let's get into the short-term rental stuff. So people got into the short-term rental stuff. And so because if there's more supply, what happens to the income is it's gone down. And so now his portfolio, a lot of it is in negative cash flow territory. And because of the interest rates, he can't really refinance, so he's trying to sell and get out of that right now. So I don't love that. It seemed to be like maybe it had a more of a short-term cycle on it, and it's not really a long-term play. And gosh, let's talk about franchises, right? I talked about franchises when I was in 2008. While I wasn't holding real estate at the time, I did some flips in there, which is much more short-term. but I did not realize that a franchise was so market dependent. So when the recession hit, this was a high-end pizza restaurant. The recession just crushed the entire concept because it was a more expensive good for you franchise, and I couldn't control it, and therefore I did not really appreciate the sensitivity of that. So what I'm looking for really is something that's a little bit more resilient and maybe recession resistant. Now, the other thing I want, like I've been hinting at, is I want a strategy that is there for the long term. Therefore, I can look in the past so I can make some predictions for the future. If I'm going to spend the next 5 years doing a bunch of stuff, I want to use it as a platform to build an empire, or real estate, a generational wealth vehicle. And so one of the reasons I like multifamily is the long-term outlook. Now, we're short about 3 million housing units. And because of the cost of construction, because the inflation was so higher, and now we have tariffs and things of that nature, for the last 18 months, developers have not been pulling permits. In fact, permits are down over 50%. Okay? So why is that? It's because developers can't make money anymore because everything's so expensive to build. And so there's really no solution behind this affordable housing problem. And so this problem of 3 million housing units short is only going to get bigger. So what's happening when the population is growing and they're trying to get into something that's more affordable, and right now renting is by far more affordable than buying a house for many different reasons you may be aware about. So the demand for rental housing, especially the affordable kind, is going to continue going up. And there's no solution in place. So over the longer term, rents are going to continue going up, and I do like the long-term outlook of multifamily for that particular reason. So this is why I believe multifamily is the ultimate wealth builder. It's more scalable, and more, this is important, without working harder, so it's more passive, and also it's less riskier than any other real estate strategy or business opportunity out there. So do you kind of now see why multifamily is the ultimate wealth builder? Think about this as you're considering what you're about to do next. Kind of run it through that filter and see how whatever you're thinking of doing kind of comes out at the end. You're probably thinking, okay, Mike, I'll see how multifamily is an incredible strategy to build wealth, but isn't this also an advanced strategy? Like, shouldn't I build up more real estate investing experience first, maybe the next 5 or 10 years, save up more money, and then transition into multifamily? Now, it's not a bad plan. I hear this all the time, but the truth is you don't need to do that. You don't need years of single family house investing experience or millions of dollars in the bank. You don't have to save up money to get into multifamily. And the same kind of thinking stopped me from getting an apartment sooner, and I don't want it to stop you either. So let's talk about these two big multifamily myths that are probably holding you back from the idea of getting started with apartments and doing your first deal. The first myth, thing I hear a lot about is, I need years of experience, so let me just build up some real estate investing experience. However, I'm gonna flip some houses for 5 or 10 years. Or I'm gonna build a rental portfolio for 5 or 10 years. And again, not a bad plan, but as a result, these investors delay getting into apartments when in fact they can get into apartments right now. The truth is, you don't need 5 to 10 years of real estate investing experience. For example, if you're to work with us, we're going to show you how to build a team around you so you can leverage their track record. And so you don't even need your own track record. Now, let me give you an example of what I'm talking about here. You call a broker up right now, and they ask you what your apartment investing track record is. You're like, well, I don't have any. And the broker's going to go, oh, that's too bad. Call me again when you bought a deal. Okay, I'm exaggerating to make a point, but the problem is it's going to be difficult for you to get taken seriously by brokers and investors if you don't have a track record. Well, what's the solution? The solution is to build a team. You got to remember this. In order to scale anything, you need a team. Look, how does Elon Musk, run multi-billion dollars? Well, he's obviously not doing the work himself. He's obviously gotten very good at building teams around him. And it's the same thing for anything you do. If you want to scale it, and it's not everything having to roll on you, is to build a team. In our world, in apartments, you build a team of a property manager. You build a team of a lender. You might have an attorney or a CPA on this team, right? You have this team of professionals around you, and now that same conversation with the broker goes a lot different. You know, you call this broker, and instead of waiting for them to ask you what your track record, you say, hey, I'm working with Sam over at XYZ Property Management Company, and they manage 5,000 units. Oh, Sam, yeah, he's a good guy. You did a bunch of business together. And yeah, and we're working with Bill over at XYZ Lenders, and they originated $1 billion in loan last year. And he goes, oh, Bill's a good guy, but then a bunch of loans with him as well. So now you're not even talking about your own lack of track record. You are now talking about the collective track record of the team that you've built. And this is an example of doing something different than a single family house investing mentality. It's just one of many examples. When you hear it, you're like, oh, yeah, it makes a lot of sense. But these little things change everything in how you approach this business of scaling in real estate. And that's what David Kamara did. He was a highly paid management consultant, and he needed to travel every week. It was great, getting paid great, but he was spending a lot of time from his family, and something snapped with him when his fourth daughter was born. And he vowed that he wanted to stop traveling and spend more time with his family. And he thought, ooh, real estate might be the answer. Now, he thought about investing in single-family homes for just a split second, but he decided it would take too long, and he's right about that. Now, of course, he didn't have a multifamily track record, but he decided to work with us, and he closed 3 deals in his first year, and a total of 95 units, and became financially free in 12 months. And this is really the power of multifamily real estate. So you don't need years of investing experience, because there are things you can do where you literally, what I call, become deal ready within 30 to 60 days, where people will take you seriously. We're going to talk about that more here in just a minute. The second thing I hear a lot about that may hold you back is that you feel like you need a lot of money. And a lot of investors I talk to, especially single family house investors, are like, I'm going to save up some money. Every time I save up some money, I'm going to buy a house or a duplex. Or I'm applying to get a HELOC and I'm going to buy some rental property with that. But you can only buy so many per year, if even more than one. And this is a very slow way to build wealth. What I'm talking about here is a faster, more reliable way to build wealth. And the truth is, you don't need your own money to buy an apartment building. If you were to work with us, we would teach you how to leverage something called syndications. And it's a fancy way of saying you can use other people's money to buy real estate. So let me talk about what is a syndication? How is it structured? How do all the parties to this thing make money? I think it's going to be very eye-opening to you, because, again, this way of doing real estate is significantly different than single-family house investing. Okay, what's a syndication? Really, it's a partnership between two parties, the general partners, or GPs, and the limited partners, LPs. So let's talk about each role here. The first role is the general partner, or GP. And they are the active operators. They do all the work. They're responsible for finding the property, securing the loan, raising the capital, managing the operations, and then selling it down the road. Now, in return for doing all the work, they get sweat equity in the deal. And they get compensated through not only fees, but also their share of cash flow and profits. And this is the role that you would learn if you, say, work with us. Now, by becoming a GP, you can become financially free very quickly, in 1 to 2 years, for some of the reasons we talked about earlier. Now, the second part of this partnership are these limited partners, or LPs, and these are the passive investors who contribute all of the capital. Now, in return for that, they receive a percentage of the cash flow distributions and profits from the eventual sale. So they receive a return on their money. And being an LP is great for high-income earners who don't want to exit what they're doing right now because it's so lucrative, whatever they're doing right now. But they are looking for a way to not only to grow their income and their wealth without having to work for it and without the availability, but they also want tax benefits. And this is really true passive income. And going this route also leads to financial freedom. Now, it takes a little bit longer. Typically, if you're a passive investor, it takes about 5 to 10 years to become financially free by investing in real estate in this way. But again, it's much, much faster than by investing the same amount of money in the stock market, which might take 30 plus years, and in most cases never actually leads to financial freedom at all. And so let me break down this structure I talked about. Let me get a little more specific so you understand in concrete terms. Some of you people are, you might be more of a numbers person, but this is important to know because it's so different than single family houses. So let me go through some syndication math. Let's again take this $4 million real estate that we talked about earlier. You would get a $3 million loan, and you need about $1 million in capital, right? So you and a partner, let's say, are general partners. You do all the work. You get 30% of the deal, and then your limited partners would bring in $1 million and would get, say, 70% of that deal. And this structure is how you can buy a $4 million deal with other people's money. It's a great partnership because you, as a general partner, as the active investor, get paid for doing the hard work, okay? And then your LPs also get a return on their capital, but they don't have to do any of the work or have the liability. So it's kind of a great win-win and a great way to structure a deal with other people's money. So what does this look like in practice? So you have general partners column. You get, say, 30% equity. It could vary based on the deal, but let's say it's 30% equity. So you would get a 3% acquisition fee. That's $120,000 like we talked about earlier. You then get asset management fees, and you then get 30% equity, which gives you 30% of the cash flow distributions and 30% of the profits at the end. And again, if you add all this stuff up, This will generate about $620,000 over 5 years. All right. Now the LPs, they get, for putting up 100% of the capital, they don't have to do the work, they have to put into capital, they get 70% of the equity. And so they will get a return on that equity, typically a 15 to 20% average annual return, which means they double their money in about 5 years. And this return is better typically than the stock market, which turns around 10% over 20, 30-year period. But they also get a cash-on-cash return. So they literally get cash flow distributions on the money they invested, which is cool because the stock market doesn't really give you a cash-on-cash return in that way. So that's one major advantage of investing in real estate syndications. But also the thing that's different is they get extraordinary tax benefits, right? So because of the depreciation and the cost segregation and things of that nature that we can do to commercial property, when they get a distribution, they likely will actually show a taxable loss on their K1. Which is awesome because now you're not paying taxes on that passive income. And if you play your cards right, when you exit, for example, you can do things like a 1031 exchange where you literally don't even pay capital gains taxes if you invest again in real estate. And this makes this mechanism very powerful to invest in. Now you might be thinking, wow, Michael, that is pretty cool. And I want to learn how to do that, but how, right? And the biggest thing I hear a lot is raising money. Most people have a hang up around raising money. And how can I do this without a track record? And this is a common misconception that you need to build some kind of track record to raise capital. And the truth is you don't need a track record to raise capital. In fact, dozens of our students have raised $500,000 out of the gate, $600,000. Scott Todd recently raised $800,000, and Russ Ryan and his partner raised 2.1, first time ever. So if you were to start working with us, you'll discover that you can learn to raise money in 30 days. In fact, it's a lot easier than you think. And there's another thing. You don't have to raise all the money yourself because you can partner with people with access to capital. We call them capital raisers, and I'll talk about that in a minute because the idea of joint venturing is yet another different thing about multifamily syndications that are not really present in single family. And that this one thing is not just other people's money, which is mind-blowing in itself, but it's the idea of joint venturing. Now, I've tiptoed around it, but I'm going to talk about it here in a minute because it's so powerful and it makes all the difference. But back to raising capital without a track record, Kyle Marcotte, perfect example here, 20 years old, he learned how to raise capital in college. Probably was not a college level class. He obviously learned it outside of that. He was a pre-med student at UC Davis, and that enabled him to syndicate 2 deals totaling 119 units worth $5.5 million. And then, no surprise, he dropped out of college because it was much more lucrative to focus on real estate full-time. And the reason I mentioned Kyle specifically is because, well, he didn't have a track record of raising money because he was, 20 years old. And so here are the 4 truths of scaling real estate. Okay, if you want to scale real estate right now, if that's on your brain, real estate, I want to scale it. There's 4 things that are true. You cannot do it with single family houses. You can only do it with apartments. It's not only the best, I believe, the only way, well, certainly the best way, the only way to become financially free with real estate. And you don't need 5 to 10 years of investing experience to get started. And you don't need your own money to buy apartment building. Okay, so let me check in with you again just to see where are you more excited about getting into multifamily than you were when you started this training? Just answer that for yourself. I'm just curious. I've seen if I moved the needle for you at all from what you were thinking before you got into it and what you're thinking now. Hopefully, I did move the needle a little bit towards multifamily. But if you are interested in getting started with multifamily, like if you're really serious about getting started with multifamily, then I invite you to kind of stay on, watch the rest of this training because I'm going to share with you exactly how to get started with multifamily by working with us. And I'm going to share with you these 3 hacks, the 3 freedom accelerators that you can leverage to actually do bigger deals faster. If you're still kind of looking around and you're not really serious about scaling right now, that's totally fine. I invite you to hop off this video and watch a lot of the other videos we have on the channel and our content, and just educate yourself a little bit more about multifamily and see how that feels for you. But for you, if you are serious about scaling right now, and obviously you're not going to have all the answers right now on how to do it with multifamily, but I'm going to share with you some ways that you can do that. If you are serious about scaling, like you're literally like, I'm trying to figure this thing out. I really want to become financially free. I want to scale my real estate portfolio. And I might be thinking, I'm going to flip another house. I want to build a portfolio of rentals, or I'm going to get in a short term and multifamily is on deck as well. Then I invite you to stay on because I want to share with you how our students are able to do bigger deals faster. And it's a very interesting phenomenon because because our students do bigger deals faster. And it's because we specialize in helping people not only get started with multifamily, but we help them not only do bigger deals faster out of the gate, but we help them scale those portfolios. It's our superpower. We've helped hundreds of students purchase over 15,000 units worth $1.6 billion, and we've been doing this since 2014. Now, we call our students deal makers, and what's interesting as we study them is they get their first deal under contract in 6 months, and the average deal size is $4 million. Now, that's a pretty big deal, right? And 6 months is pretty fast. Now, I can tell you that the vast majority of our deal makers don't start working with us thinking they can do a $4 million deal in 6 months, but then they do. How is this even possible? And the answer is that they leverage what I call the 3 freedom accelerators, the 3 things that you should also leverage so you can do bigger deals faster and really scale your real estate portfolio much faster than any other way. And the first one, we call them the first one that I want to share with you is to follow the right system. Okay, follow the right system so you don't have to reinvent the wheel and figure everything out on your own. The second accelerator is to get the right support to guide you and to hold you accountable. And the third one is to join the right network so you can connect with deals, capital, and experienced partners. So let's break each one of them down. This is exactly how we help people become financially free with apartments. So I'm going to go slowly and maybe take some notes here. This is really, really important. This is the difference. Okay, so the first freedom accelerator is getting access to the right system. Now, many new investors don't follow a proven system. They try to do it themselves. They try to figure it out on their own. And as a result, they struggle with analyzing deals, talking with brokers, raising capital. In the end, they never do a deal. And that's because they're just simply not following the right system. But this does not happen when you work with us. When you first start working with us, you get access to our Dealmaker Blueprint. This is the most direct route to buying your first apartment building deal and becoming financially free. It shows you step by step and week by week how to go from where you are right now to closing your first deal and becoming financially free. Now, our process is very systematic, and it's that way because I'm a former software engineer, as you'll see, and it's very step by step, so you never really feel overwhelmed. So the first step in the process, you're going to develop certain skills. You're going to get the skills that you need to succeed. You're going to complete our online self-paced course, so you learn everything you need to know about multifamily syndications, from how to pick your market, analyzing deals, getting deal flow, talking to brokers, talking to investors, raising money, securing financing, and more. Now, you can do that over the weekend. Okay, then you're going to select your market, and this won't take longer than a week. Then you're going to start building your team. There's that word team again. It's very important because most investors, new investors, skip this step and they struggle. But when you work with us, you're going to recruit. We're going to show you which members to recruit. You're going to recruit a property manager and a lender right from the start. Now, we're going to teach you how to do this, but we can also connect you with the people in our network. This will allow you to borrow their track record and appear like a seasoned multifamily investor when you speak with brokers and investors later on. Now, you're also going to lean on your team for the actual transaction, of course, as you evaluate deals, you're getting financing and managing the property. Now, next, you're going to learn how to analyze deals. Now, this is much easier than you might think, even if you're not a numbers person, because you're going to use what we call the SDA, the Syndicated Deal Analyzer. It's the most widely used syndication analysis tool on the planet. Then it makes it very easy. By entering 7 pieces of data, you can analyze a deal in 10 minutes. And you're not going to guess at what numbers to use because you're going to lean on your team of professionals that you already built in the previous step. Now, once you've built your team and you know how to analyze deals, we're going to teach you how to generate deal flow. Again, a lot of new investors make a mistake and they try to go on the MLS, or some think they're super smart and they go on LoopNet. But that's not where deals are happening, right? The way to do it in multifamily or any commercial real estate is from brokers. And we're going to teach you where to find these brokers, what to say, how to build trust with them quickly so that they give you access to what's called off-market deals that only you see, or a very small group of buyers sees. And so when you work with us, this is not going to take years, but about 60 days, even if you have no multifamily track record and have never talked with brokers before. Now, step 6 is to secure financing. We're going to teach you not only how to speak with lenders and to get the best terms and what to look for, but also we're going to introduce you to our network of preferred lenders as well. And then you're going to learn how to raise capital. We'll teach you 2 ways to do that. One, by raising capital yourself from private individuals. This is very important to learn this. And the good news is that you can start talking with investors after about 30 days, and you get really good in about 60 days. Now, the other good news is you don't have to raise all the money yourself for the reasons I mentioned earlier. The second way we're going to teach you how to raise capital is by partnering with others and by giving you access to our network of capital raisers who have access to capital and looking for deals. And maybe you are the kind of person who can find a deal. Now, in our community, there's about a 50-50 mix between deal finders and capital raisers. And I'm going to talk about partnering in just a second because it's so important to understand this concept. Now, by continuing to speak with brokers and investors, and you're working through the system, et cetera, so if you are likely to get your first deal under contract in about 6 months. Now, I know this may surprise you. It's just what our track record is if you follow this process. And then you're going to lean on your team that you're working with us, your experienced team, to help you close the deal because there's some twists and turns for closing. And then you're going to formally hire your property manager to manage this team. And then you're going to do it again until you're financially free, until you're exiting whatever you're doing right now. And many of our students quit their job after their first deal. And others might wait for another deal or two, but it's very rarely exceeds 3 deals. And then once you become a full-time investor, we're going to help you scale and really show you how to invest in the syndication business to scale to 1,000 units and beyond if that's what you choose to do. And this is Kyle Mitchell, and he kind of followed our process. He was a former manager at a golf company, and he followed our system and quit his job in 11 months after he started working with us. Now, during that time, he closed a 41 unit, and then he had when he closed that, he raised $1 million for that first deal, he and his partner. And at the end of that, he already had a 128 unit property under contract for $15 million. You can see how the deal gets quicker. And he leveraged the 3 Freedom Accelerators as well as this concept of partnering, which I'm going to talk about here in a second. And just to give you an indication of scale, today he manages $300 million of real estate across 1,300 units in Arizona, and he's actually sold 5 of them as well. And so what I'm trying to emphasize here is the importance of the right system. So can you see now that having the right system and following the right system like this can help you do bigger deals faster, right? It's absolutely critical. That's why it's one of the 3 accelerators. Now, the second one is to get the right support. Most new investors, they don't build the right support around them. And as a result, they struggle with getting a deal done. They make big mistakes and ultimately quit the business. And that won't happen when you work with us because we guide you every step of the way. So when you first start working for us, for example, you're going to get access to what we call your guide. This is your personal concierge, your personal coach that is going to guide you step by step through our system. He or she's going to connect you with the right resources at the right time. And this is important so you never feel overwhelmed because the idea of buying an apartment building is very overwhelming. But you don't have to worry about that. All you're going to do is follow the next thing in the system, and your guide is going to share with you what that is. And your guide is also going to hold you accountable so that you stay on track. We actually have an accountability system to help you stay on track. Now, once you completed your training, your guide is going to pair you up with one of our mentors. Now, when I say mentor, this isn't someone who's investing in multifamily on the side and still has some W-2 job. These are full-time investors. They run multi-million-dollar syndication businesses, and they're very hard to find. Okay, they're very expensive, and you will get to work with one of these people. They're going to help you when you get a live deal under contract, help you close that without making a big mistake. So you're also going to get access to our Dealmaker Mastermind. This is our online community with over 600 other like-minded people who are serious about scaling their real estate portfolios with apartments as well. It's a great place to connect and network and get additional support 24/7. So do you see now how getting the right support like this can help you do bigger deals faster? Right? So you need this peer level support, which is the community of people around you, but you also need this mentoring relationship, and you also need a coaching relationship to stay on track. So make sure that you have your right support around you as well. And this is one of the things we provide. The third thing we provide is we give you access to the right network. Because many new investors, they never connect with the right network. And as a result, they don't have access to deal flow. They can't raise enough capital. They can't meet experienced partners who can help them get ahead. And as a result, they struggle getting a deal done, or they do a small deal and it takes a long time to scale. Now, this will not happen when you work with us because we're going to give you access to our Dealmaker network. You're going to be part of a private community with that only our mentoring students have access to, who are actively sourcing deals and raising capital. And this is going to give you access to partners who have that capital or deals or have experience, and you need all 3 of this. And having access to this private community is pretty cool but we go one step further and actually give you a list of partners to reach out to depending on what you need, right? So what I mean by that is, let's say you are more of a deal finder and you find this great deal, the purchase price is $4 million, and you need to raise $1 million. We're going to give you the names of 24 capital raisers who have access to capital and they're looking for deals, right? Same thing, if you're more of a capital raiser, you have access to capital, you don't have deal flow, we're going to put you together, and we're not going to let chance. We're going to facilitate and do some speed networking. Okay, and so we also in our network have a number of high net worth individuals who are literally looking to invest as well. So the network is very important. And do you see that how that's important? You got to make sure that you're plugging into a network so you have access to others with capital, you have access to others with deals, and you have access to other who are experienced operators, because sometimes you need to partner with them as well. Let me give you a perfect example of what these partnerships look like. Now we're talking about joint venturing. Okay, so Andy Vaughn in the middle, Seth Robinson on the right. Andy in the middle, obviously he joined our program, wanted to get started with multifamily investing, and what we discovered is that he doesn't love numbers, and with that spreadsheets, and therefore he was kind of resisting analyzing deals and talking to brokers. We're like, oh, that's not good. But we discovered that his personality is much more relationship oriented. So he has a gift of gab, loves to talk to people. He has an insurance background, so he's used to that kind of stuff, loves golf. Okay, and so from a personality perspective, he much more gravitated more to being a capital raiser. So when you start working with us, once you learn the fundamentals, everybody has to learn the fundamentals, we're going to start specializing you towards more of a capital raiser route or more of a deal finder / operator route. And Andy definitely fit the capital raiser bill. Now, Seth, on the other hand, was opposite. Right? He's an engineer, now higher up in management, managing a bunch of engineers. He's much more analytical, much more detail-oriented, and so he was very good at analyzing deals and talking to brokers, but he kind of resisted the idea of raising money because he was uncomfortable talking to people. Now, he ended up raising $100,000 for his deal, but they really needed more like $300,000, so Andy came in and closed the gap. So Andy raised $200,000, and Seth came in with $100,000, and they did their first deal together. And this is very, very common. And Seth has gone on to find other deals and operate. And Seth, over 14 months, raised $760,000. And joint venturing really made this possible, because without each other, the deal finder couldn't do deals. And without the deal finder, the capital raiser couldn't do any deals. So in our environment, we encourage joint venturing. In fact, it's almost a requirement. And this is the power of the right network. So if you were to work with us, here's what it looks like from your journey from 0 to 1,000 units, okay? So the first step in our process is to get you what we call deal ready, okay? It takes about 90 days. So you immediately connected with your guide, your personal coach, and you get started what we call with deal maker certification. This is a 90-day intensive to get you deal ready. Now, during this time, you can complete the online training course. We're gonna learn everything you need to know about multifamily investing, from finding deals, raising capital, getting financing, doing due diligence, and managing the property. And by the time you're done, you also will have picked your market. You will have built your team that's ready to go on the ground, and you feel comfortable with analyzing deals and speaking with brokers, because in this time, you will not only learn to do it, but the certification actually allows you to practice in a safe environment. And all of this takes only 90 days complete, and many do it much faster than that. It really depends on how much time you put into it. All we ask is that you dedicate at least 5 hours per week, and you'll be very successful. So can you dedicate 5 hours per week to your financial freedom? Okay, if you can do that, then we can make this work. Now, the next step is to get your first deal under contract. So if you follow our system, like I just talked about, this normally happens around 6 months. Now, in order to get this done, we're going to connect you with one of our full-time syndication mentors, and they're going to provide you with live deal support so you get your first deal done and avoid some big mistakes. They are going to push your comfort zone, and this is one reason that our students tend to do bigger deals, but also they're going to look over your shoulder to make sure you're not making that big mistake. And sometimes avoiding a big mistake is walking away from a deal, which is sometimes hard to do, and your mentor is going to help you make that decision. We're also going to connect you into our deal maker network so you can connect with other partners for capital, deals, and experience. Now, if you continue working our system and you're talking to brokers and investors, you're going to have that deal under contract in about 6 months. Now, step 3 is to help you close that deal. There are a lot of twists and turns in the closing process, and we're going to guide you all the way to closing. And then you repeat until you quit whatever you're doing right now and you become a full-time investor. And like I said, most of our students quit their jobs somewhere between the first and the third deal. Now, at that point, step 4 is to scale your business, and you're going to get access to what we call our Dealmaker Elite community, where we help you scale your business to 1,000 units or raising $10 million per year. Now, there's separate trainings and mentors for this. For example, one of the things you're going to learn is how to craft a 5-year projection, also how to raise capital online with an online marketing platform, and a lot of other things that are relevant to scaling once you do that first deal. But in the beginning, it's very important that you just focus on getting that first deal done and not thinking about scaling a platform. And so that's our process. That's how we support you through these steps to get your first deal done and set you on the path to financial freedom and beyond. Okay, I've said a lot, so let me check in with you right now. Are you still ready to scale, right? Are you excited about the idea of actually scaling with apartments? And equally importantly, do you maybe want to do it rather now than later? Like something, hey, gosh, I surely would like to get a deal on a contract in 6 months. And I want to do it now. I don't want to wait another 2 or 3 or 5 years. I want to get started now. And if that's you, then I invite you to work with us because, as I said, we guide you every step of the way until you do your first deal. And it is true that we have the best program on the planet for helping you get started with buying multifamily, but working with us is not for everyone. And there's a specific type of person that I'm looking for. And I'm going to kind of describe what that is. Because if you fit that description, we have a very, very high degree of probability of getting you very successful very quickly. So here's who I'm looking for right now. If you're currently making over 6 figures in your job or business, and you realize now that scaling is very important for you, and you really want to use multifamily to do it, then this could be very good for you as well. So I'm looking for people who have real estate scaling on their brain, and you've either done some flips or rentals, and you want to scale because you understand that you can't scale, or you already stand like David Camara that you want to skip the single family house investing entirely. But either way, you want to scale with real estate, and that's really, really important. Because we specialize in helping 6-figure earners scale with apartments. It's our superpower. Working with us is also for you if you value your time. If you don't want to reinvent the wheel, you want faster results by leveraging systems and other people's experience, then working with us might be a very, very good fit. Also, if you're financially stable. Now, while you're going to learn to raise capital, it helps to have money for investing in your education, putting down a deposit, traveling to tour the property, fund due diligence costs, things of that nature. So if you want to invest in real estate, you probably know that you need to be financially stable. And if you're not right now, then this may not be the best time to get started. But also, if you have a bigger vision for yourself, you want something better and bigger for you and your family. You're not just looking for a rental or two or a flip or two. You're looking for a way to scale a business with real estate so you can not only become financially free, but maybe build a bit of an empire or generate generational wealth, maybe even leave a legacy. And also, lastly, if timing is important, if you want to do something now, you're ready to go right now, and waiting one more day to scale is unacceptable to you, then if I'm talking to you right now, then let's have a conversation. So click the video description, okay, in the video here, or scan the QR code with your phone right now, or just go to the URL that you see right there, and you're going to complete a short application, and then you're going to pick a call in the next day, 1 or 2 days. Now, on that call, we're going to explore whether there's a mutual fit. If not, there's no worries. We'll point you towards some additional resources and part as friends for the moment. But if we do think there's a fit and we think we can help you achieve your goals, then we can share with you in more detail what that would look like to work together. So just a word of caution, like I said before, working with us is not for everyone. So I'm looking for 6-figure earners who want to scale with real estate. Because I know that we can help you do your first apartment building deal in the next 6 to 12 months, become financially free in the next 1 to 2 years, and scale to 1,000 units. I just know that because we've done it so many times. Now, I have a very small team of full-time syndication operators who own thousands of units, and they're very expensive and hard to find. And I'm going to give you access to them, but you have to be the right fit. And to find out if you're a good fit for working with us, then scan that QR code or go to the link and fill out the application form. And if you don't qualify, we'll let you know. And we'll send you additional resources. Everything's totally fine. But if you do qualify, then let's talk about what it would look like to scale with apartments. Okay, cool. But maybe you're looking at other programs. Maybe you're actually down the path a little bit and you're actually looking at multifamily, which is cool. There's a few things I want to highlight about what's different about us, maybe some other programs you're talking about. And one of the things is that we've been around for longer than almost anybody else, since 2014, when most training companies are 1 to 2 years old or at best 4 years old. And that means that we've been through multiple different markets. I've been investing in real estate since 2006, meaning I've been through the '08 crash, the crazy pandemic market in 20 and 21, inflationary period, now this current market and where we are now in 2025. So we've been around a long time. We've worked with a lot of students. Another way that we're different is that our program is a mentorship program, not just a community. Yes, we have a community as well, and there are other programs out there who are really just communities, are not mentorship. So here's the difference. When you join our program, we have this dedicated dealmaker guide. This is your personal concierge, your coach that you're meeting with consistently to answer your questions, hold you accountable so you don't get stuck. Now, with other programs, when you join, you're kind of now part of a larger community. And while there may be a course and regular group calls, if you have outside questions, you'd have to jump on a group call, and no one's really holding you accountable as well. And so in our world, you're not only part of a larger community, yes, but you're also working with a small mastermind group of people. We found this to be the most effective way to not just be in a large group, but be in a very, very small group directly led by a mentor. And not only do you learn from your mentors, but you have now an immediate network built right around you as well. So make sure that you get something with mentorship, because just getting into a community with group calls is not really going to make you successful. Now, speaking of our mentors, the third way we're different is that all of our mentors are full-time, meaning full-time, not mentors, full-time syndicators. So they don't have a W-2 job on the side. They're full-time in syndication business, and this is why they're hard to find, because they're building and scaling their own business. And they're hard to find because most everyone does not want to take the time to help other people. And I don't care what we pay them, we're definitely underpaying them for what their real value is in building their real estate portfolios. And between them, they control over 5,000 units valued at nearly $600 million, and they raised $45 million. So you're going to be working with mentors like this. They're going to help you with live deals so you get your first deal closed without making a big mistake. And the fourth way that we're different, and this is a big one, is that we actually guarantee results in writing. And our guarantee is that you'll close your first deal in the first 12 months. And if you don't, then we're going to continue working with you for free until you do. We're that committed to you. We're the only training company that does that, and we can do that because we have a repeatable process that has worked for hundreds of people since 2014. We've been honing it and testing it and making it better, and we know what works, and we make the right resources available to you at the right time. And the last way we're different, this is also a big one, is we help you scale. So we don't just help you do your first deal, which is an extremely meaningful milestone. We don't just help you become financially free, which is a bigger milestone, but we also help you scale. And there's really no other training company that does that. And we have a separate training and mentorship and community specifically around scaling. Jonathan Way followed our Dealmaker Blueprint, and he was working 56 hours per week as a CPA and looking for a way out of the rat race. And he started working with us in September, and we helped him close his first deal in 8 months. It was a 34-unit property. He then did 2 more within a few months. It was a 46-unit and then a monster 186-unit. And he took that first deal to quit his 6-figure job because the acquisition fee, and he saw the pipeline that was forming doing this activity. He says, I'm going to get better results, faster results by quitting what I'm doing. And today he has over 2,300 multifamily and self-storage units valued over $100 million. Another example is Raquel and Kyle Atkins started working with us in June and closed 3 deals with us and became financially free in 8 months. They really hit it hot and heavy. And so it took them only 8 months for both of them to be able to quit their day jobs. Another power couple that happened to work together was Paula and Jonathan Nichols. And it took them 17 months to become financially free. They joined in July. Their first deal was a 100-unit deal. And then they did a smaller 8-unit, another 75-unit. And it took them 17 months, and they're actually on our mentoring team right now. So they're actually 4 out of, that's about 80% of our mentors are actually former students who not only did their first deal, became financially free, and I tapped them on the shoulder and like, yes, I'd love to help other people do what I have done. So there's nothing pleases me more than having former students help others as well. So if you want to do what they've done and hundreds of other people have done, and you're ready to invest in yourself, then click the link in the video description or scan that QR code and let's book a call with us, because we guide you every step of the way. You're not alone. And we guarantee that you're going to close at least your first deal in the first 12 months. Now, if you value your time and you're looking for an edge to get started now, then you want to get your first deal on a contract in 6 months and be able to replace your income, then let's have that conversation. Now, you might be wondering what the investment will be because I've been silent on the matter. And yes, this will require a 5-figure investment. Now, one thing I won't do is sell you a $2,000 course and expect you to close a $4 million deal. I stopped doing that several years ago because I realized that a course is not going to make you successful. It's the whole package. It's following the right system. It's having the accountability. It's having the right support of mentors. It's having the right network for access to deals and capital. We have multiple programs based on your situation. So I don't know what your situation right now. And because we have multiple programs, the best thing to do is to book a call and have a conversation with us to see kind of what your background is, what is your experience professionally and with real estate, and what are your goals. And based on that, we can make you a much more specific proposal. So that's why I'm not throwing out a price right now, because it's going to vary a little bit based on that. My recommendation is to just go ahead and book that call and to have that conversation. Now, a lot of you may be on this call going, and you're really serious about scaling your real estate portfolio, but you really want to do it yourself. You're like, why should I invest any kind of money, especially 5 figures, into mentorship? I can do this myself. I've flipped a couple houses. I've done rentals. And why should I do this? And so I want to speak to you right now because that was my biggest mistake when I did my first deal back in 2011. This is a 12 unit in Washington, D.C. that I got from one of my wholesalers at the time that I was getting deals from for the house flips. And the deal was essentially a nightmare. And if I were to boil it down, it was because I did not have someone experienced advising me. The first mistake I made, I bought this building in Washington, D.C. Well, Washington, D.C. is a very pro-tenant jurisdiction, and so a mentor would have advised me not to buy there because of the pro-tenant laws there. And the second mistake I made is I didn't realize I had a professional tenant until I closed on the building. Now, that tenant made my life miserable. He didn't pay the rent. That was the minimal of it. But he sued me every 6 weeks, and it was impossible to get him out due to the pro-tenant laws in the District of Columbia. And a mentor, aside from advising me not to buy there in the first place, would have advised me to research the legal history of each tenant in buildings like this. And finally, I hired the wrong property manager who then didn't know how to deal with this kind of tenant. And a mentor would have advised me to hire the right property manager that was familiar with Section 8 properties like this. It was a Section 8 property. And fortunately, after 18 months, things calmed down. Otherwise, I would have been out of the business and never came back. But I lost so much time and so much money. In fact, I ran out of money and really couldn't figure out and couldn't really finish the construction. I just got lucky a little bit because the market went up, but I really ran out of money because of all the legal fees and fines I got through this process. So I made big mistakes. Okay, you can avoid those big mistakes by working with an experienced team like we have. And it's also bad enough. The other problem, the brother was only a 12 unit, right? I already had some real estate investing background. With a mentor, I probably would have skipped the 12 unit entirely and gone to something much bigger. And so if you do it alone, you can do it alone, but you're going to scale a lot slower and you're going to make a lot more mistakes. So if you want to avoid that, then let's have this conversation, because you can try to struggle on your own, or you can get help from a world-class team of experts. And so let's book that call and let's talk about how we can help you get started. The link is in the description. So if you're still watching this video and haven't booked a call yet, I want to talk to you right now. Because what's holding you back right now? Why haven't you booked a call? Right? And I want to talk to you about why most investors fail to scale. And it's not so much that they get started and fail to scale. Most investors fail to scale because they don't get started. And it's typically because of this stinking thinking. The limiting beliefs that we tell ourselves. And I did the same thing back in the day, because in 2009, when I started getting really into flipping houses, I knew all about apartments because I took a class in 2006. So I knew about apartments, but I didn't get started. Why? And it's one of these limiting beliefs I'm going to talk to you right now, because I don't want you to be held back by one of these limiting beliefs. The first one is that the market isn't right. The first thing people say, oh my gosh, maybe the market's not right. Maybe I should wait until the market gets better. But the problem is that there's no such thing as a perfect market. And so these people never stop waiting and they never take any action. So the lesson is this: don't wait for a perfect market, because it doesn't exist. Okay? Instead, figure out how to get into this business now and learn how to adapt your underwriting, your analysis, for example, to adjust what's going on in the market. That's why you're working with an experienced team of mentors, because the honest truth is the market changes every quarter, right? Interest rates go up, interest rates go down, loan proceeds go up, loan proceeds go down, markets change, right? Things are always changing. And so get in there now, get your education, and now start working with an experienced mentor who not only is operating their own syndication business, but has the benefit of working with dozens of other students, right? We have so much experience. We know exactly what's going on in the market to help you navigate and adjust what's going on in the business. So there's no need for you to time the market. It's for you to get your education and work with an experienced mentor so you can get started now. The second limiting belief I see a lot is that people say they're too busy. The time isn't right for them. I just want to buy one more house, one more rental. There's something going on with their job or some other personal situation. There's always something going on. And I call this the when-then fallacy. It's like saying, when I have energy, then I will work out. When in fact, working out is what gives you energy, right? Look, here's the thing. You're always going to be busy. It's never going to be a great time to start anything. There's always something going on. But the truth is that 100% of the people who work with us have demanding six-figure jobs, just like you do. So our guidance is that if you can carve out at least 5 hours per week, you can be successful in this business. And it's not so much a time management issue as it is a priority issue, right? If you make financial freedom a priority, you will come up with the time. If you sit down with your spouse and family and say, look, enough is enough. I'm going to put us on a path where I can be at home and we can build wealth on our own terms, and you have a conversation with your spouse and family and you decide together that this is going to be a priority, guess what? You're going to make it a priority. It's like, you're very busy doing your thing all day. You have no time for anything. All of a sudden you feel this shooting pain in your mouth because a tooth hurts. Guess what? You're going to drop everything and go to the doctor, right? Because now it's all a priority. So if you make this a priority, then you're going to find the time. So don't let busyness be an excuse to your financial freedom. Decide right now to make financial freedom a priority for you and your family. So let's have that conversation. So another thing I hear a lot is that people say that they've been burned by previous experience. So they're very skeptical of these programs and gurus. And they're afraid, of course, of being burned again because they got burned before. And maybe you joined a program and you experienced what I just described, and it certainly happened to me, and it sucks. It really does. That doesn't mean that programs and mentorship are bad, right? So don't throw the baby out with the bathwater, but there are some bad programs. But even if you've been burned before, I'd hate for that past experience to burn you twice. Once for the bad program that you previously enrolled in, and then twice for missing out on the second program that could change your life. Now, we're one of the OGs in the space. Original companies, we've been doing it since 2014 for over a decade, and our students have closed over 15,000 apartment units worth $1.6 billion, right? So we've been around a lot. I think maybe we're different. We love to earn their trust, and the best part about it is that we guarantee success. And this is because we have the best track record out there, and we're committed to your success. Now, after this video and after you book a call, don't take it from me, right? Go to this link that you see here in this video. Go to this link and check out all of these case studies that we have on YouTube, etc., and listen to those people. People who've never done a deal before and now have done a deal before and are financially free. So check that out. Go to that link that you see here on the page and just check it out. Just listen to some of those people that are from all walks of life. Now, maybe you're still not sure, and that's because you're more of a cautious person. Which is a good thing, right? You want to know everything up front. You want to plan in place before you move forward. But also the downside of that is that you tend to overanalyze things. If you need to have all the answers up front, then it's going to be very difficult for you to move forward. And the kind of thinking is super awesome for many jobs. Like if you're a surgeon, you better know exactly what you're doing all the time or people die, right? So, but if you want to be a successful entrepreneur, you have to learn how to deal with uncertainty. Okay, because as an entrepreneur, you're never going to have all the answers up front. You're never going to have the plan 100 figured out, the fail-proof plan, because as Mike Tyson once said, everyone has a plan until they get punched in the face. So yes, you can have a plan, but you're resourceful as a entrepreneur, and you have confidence from your past, from your professional career, that you are resourceful. You can solve problems. You can deal with uncertainty, and you've done it in the past. So what will be different about this thing, right? What will be different? It's impossible for you to have everything figured out up front. There's going to be uncertainty, but bet on the horse, right? Bet on the system. So it's like you go into college, right? No one requests a syllabus for all 4 years up front, so you know exactly what's being done, who's teaching it, and when the class is going to be. No. What do? You pick the college. And why do you pick the college or the university? Because it has a good reputation, and a good reputation is based on track record of helping people get jobs that get paid. Okay, so you get on that horse, and you bet on the vehicle, and it gets you to that success. Same thing here, right? We want to earn your trust as the vehicle, as the mechanism to get you in. We'll figure out all the details as we go along. So all we're looking for here is for you to feel confident moving forward with us so that we get the result that we're talking about. So don't let these limiting beliefs stop you from achieving your dreams. Like, make the decision right now to take the next step. And that next step right now is to have this conversation. So again, scan that code or go to the link and let's talk about how we might be able to change your financial future. So as we wind down here, let me ask you a more serious question. What does financial freedom mean to you? Like, have you thought about this? What your financial freedom mean to you? Like, after this call, like, literally take some time and journal for just a few minutes and answer the question, what does financial freedom mean to you? And you might say, well, it could mean that I could quit my job. I would have more time to travel. I would have more time with my family. Then keep asking the question, why is that important to you? Like, if you could spend more time with your family, why is that important to you? Do you maybe have a strained relationship with your family because you're working too much? So why is that important to spend more time with family? Where's that going to lead? And really peel back the onions on what does financial freedom mean to you, because the stronger your why, the more likely you're going to be successful, right? For me, it means that I have options. I can work whenever I want to, and I can spend time with my family. I can work when I want to. I can not work when I want to. This is my family, my hoodlums here, right? So I can take my wife out to lunch. We homeschool our kids, we have, and combined with the passive income from real estate allows me to travel quite a bit. So we spent the month on the beach. We did it once a year. We typically have a longer vacation in Asia or Europe of some sort. And yes, I do work hard. Actually, I enjoy being productive, honestly, but I do it on my own terms so that I can focus on the things I want to focus on. And it's not just money. It's also family and relationships, but it's also my health, right? It's also my spirituality. So how can I do it? What can I do to make progress and develop myself in each of these areas? One of the things I love doing also is teaching, right? So I love teaching as well, and I love the art of the deal. These are my two partners, Garrett Lynch and Drew Niffen. I really love doing the deal and doing real estate transactions. Everyone's a little different, and I just love that. So what does freedom mean for you? Like, and also, what are you willing to invest in that? We talked about 5 hours, five-figure investment in that. Now, how much would you actually pay someone if you knew with certainty that you could quit your job next 1 to 2 years? Like, how much money would you invest? How much time would you invest? I want to try to give you that certainty that it's actually in the realm of possibility, and in fact, a very, very high probability. So if you don't book a call right now, I just don't want you to come away from this call with regret, thinking that, oh my gosh, I waited because of some limiting or false belief I had. So, I really want you to move ahead and get you to the next level. Do you want to be where you are right now, this time next year, right? So if so, then do nothing, right? Because there's no harm, no foul. But if that bothers you like a lot, then do something about it now. And let's have a conversation with us. We want to support you every step of the way. And of course, we guarantee results as well. But what if you wait? Like, what could that cost you? Let's talk about that, the cost of waiting. There's a financial cost. We talked earlier that, if you invest in this business now, you could do a $4 million deal in the next 12 months, and you could generate $50,000 per month over 5 years. So it's got a financial cost. Now, this number probably is abstract. It's definitely meaningful, because what would that enable you to do? But to me, there's a really true cost of waiting. Okay, what if you don't figure this thing out, this real estate investing thing out, so you can quit your job? What if you keep doing what you're doing? And it takes another year, and now you're 3 to 5 years ahead. You've lost. How do you feel about that? How does that affect you personally? The time or how you spend your time at work and otherwise, or your choices. So what about your health? What about your relationship with your spouse and your children? In other words, how much longer can you afford to wait? And I love this analogy of the ladder of success to drive this point home, because we're all on some kind of ladder of success. The biggest problem is we never look to bother what wall it's on, right? Whatever you're on right now, look ahead. If I continue on this ladder of success for another 3 to 5 years, where will I be? Like, I thought I was accomplished on the real estate investing ladder when I started flipping houses, and I got to the top. I was like, I am the real estate investing king, when in fact, the ladder was on was against the flipping wall. But I didn't want to be on the flipping wall. I wanted to be in the financial freedom wall, and that's not what my ladder was up against the entire time. I didn't realize it. So what wall is your ladder on, right? And maybe you should stop climbing that ladder and put your ladder on a different wall. And what I'm trying to argue with you is to put that ladder up against the financial freedom with real estate wall with apartments. So I love this quote here by Andy Stanley. He says, "It is your direction, not your intention, that determines your destination." So where you're going to be is not where you say where you're going to be. Okay, that's totally meaningless. Everybody says they want this, that, and the other thing. The question is, what are you doing? I can always judge where someone is going, not by what they say, but what they do. So what are you going to do next? So if you want financial freedom and you want to use real estate to do it, then decide right now to take action. So click this link in the video description or scan the QR code and let's have that conversation about a different future. So book a call right now, right before you get off this training. Don't wait, right? Because this conversation you're going to have maybe the most important conversations you have all year, maybe even all your life. So don't look back on this moment with regret that you didn't take action because of fear or some limiting belief. Make the decision right now to get started. So we want to support you every step of the way, get you to the next step. So let's do this together. And here's to financial freedom.